Welcome back to First Race right here on ET Now. And now let me welcome Mr. Ranjit Rath, who is the CMD of Oil India Limited, joining us on the show. And he's also the Chairman of Numaligarh Refinery as well. A very good morning and thank you so much for your time. And Mr. Rath, firstly, if I can have your broader outlook on the international oil prices as well, because the reason I ask this, because oil has been quite range bound for the past couple of months, but off late there has been a bit of an uptick. If you can give us some sense, what are you looking at when it respect to the international prices and the factors that are at play?
First of all, thank you very much for having me. Good morning to you and all your viewers. It is always a pleasure talking to you. I wish I could predict oil price. That's anybody's guess. But considering the outlook that we have created for ourselves, it is about $65 plus or minus by $1 or so. Given the fact that we are sure that the growth percentage of demand and the growth percentage of supply are at a discord. I mean, the supply is more. Therefore, we are looking at that number. As far as our preparation is concerned, yes, as a E&P company, we are actually well geared with our cost optimization strategy so that we will be able to maintain our margins with that.
Okay, so that's the take coming in. Mr. Rath, let's talk about your MOU with Hindustan Copper. Help us understand what is the expected timeline of translating this MOU into concrete projects, and what specific minerals are you going to be prioritizing under this collaboration? Just a general outlook on where do you think this collaboration could head in terms of the timeline and the deployment?
Sure. So, as part of the National Critical Mineral Mission, we have also picked up two blocks, one a graphite and vanadium block in Arunachal Pradesh, and one is a potash block in Rajasthan. Hindustan Copper has been a miner, and we understand that the E&P expertise that Oil India possesses and in the regional control that we have in the northeastern region, having HCL with us from a mining point of view will create a good synergy gain. So the MOU is focused in the creating an ecosystem of exploration and development in critical and strategic minerals in the domestic sector, where they are going to join us as part of the exploration campaign in the graphite and vanadium deposit in Arunachal Pradesh. And just to share with you, as we speak, the geological mapping and the initial exploration work has already been started, and we are getting excellent traction from both the state governments as well, whether it is graphite and vanadium block in Arunachal Pradesh or it is potash block in Rajasthan. So we are looking forward to this collaboration where tomorrow, after we convert this composite lease to the mining lease, should there be enough economic viability post exploration, Hindustan Copper will join us for the mining activities.
Right, good to hear that. Mr. Rath, so how exactly does Oil India plan to participate in the government's 1,500 crore rupee recycling and critical mineral scheme?
I would actually give you a perspective. We are a E&P company with significant presence in the upstream part of the natural resources value chain. And we understand subsurface better than anybody else in the manner that we have been handling mineral, that is liquid fuel. Now, having gathered these expertise, we strongly believe that we have a role to play in the upstream value chain of the critical minerals, and that is where our strategy is. We would first secure a couple of blocks, both domestic and overseas. Overseas discussions are going on, where we have collaborated with Kabil, that is Khanis Bides India Limited, Coal India Limited, and OVL. So our focus would currently be on the natural resources part, upstream value chain, and then the downstream. And possibly we will have a look at the recycling somewhat bit later.
The other question with respect to the geopolitical situation, we all know what's been happening between Russia and Ukraine for quite so many years now. But in the latest, we do understand that Ukraine has been targeting some of these Russian assets. Even you have exposure to that market. Wanted to understand the latest. Has there been any impact per se with respect to your Russian assets? Anything that you can share with us?
Absolutely no impact. We have two excellent investments in two of the asset in Russia. In one of the asset, our initial investment has already been recovered in terms of dividend received. In another asset, the range is already 90% or so. So this year we are looking forward to even securing our initial investment. Both these assets are doing well. So we are looking at a continuous dividend yielding. So as far as the current situation is concerned, we do not foresee any problem, barring the some component of the dividend which is parked in our bank account in Russia. And we are also having a lot of traction within the government here and with Russian government to see that that money or that dividend component can be used elsewhere. So there is absolutely no issue.
So, Mr. Rath, if I could ask you, what exactly is the overall visibility on the business for the second half of the fiscal and also the longer term vision of the next 2 to 3 years, including the key growth drivers, the strategic priorities, and even challenges that you may actually foresee?
I'll give you a nice narrative. As far as Oil India is concerned, we are doing well. We are looking at a target of about 7.5 million metric ton oil and oil equivalent. Last year, we did 6.71, and we hope to have some growth in crude oil and in natural gas as well. As far as Numaligarh Refinery is concerned, last year our capacity utilization was more than 100%. We had an excellent distillate yield of about 88%. This year also, as we are selling through, we are hopeful of also scripting 100% and more capacity utilization. Next year also, I must share with you that the Numaligarh Refinery expansion program is on track, and by December end, the mother units, that is the CDU1 VDU units, we will start the commissioning activities. And year, the end of the financial year, we will also start the commissioning activities of the remaining units. So year after, we will have about 40 to 50% utilization of the expanded capacity, and by 2028 we should be able to have complete stabilization of 9 million metric ton refinery. We also are having exploration acreages about 1.12 lakh square kilometer, of which 40,000 is in the deep and ultra deep water. As we speak, we are going to carry out the seismic 2D and 3D in the deep and ultra deep water of Mahanadi Basin and KG Basin. So this is the overall outlook, and our focus will continue to secure some more blocks in the ongoing OLP 10 bid round.
Mr. Rath, we say that you have been expanding into the renewable space as well. In the latest, you have signed a JV with Rajasthan Vidyut Nigam for 1.2 gigawatt plant. Give us some more sense on there. When is the commissioning expected? And going ahead, what are big plans with respect to the renewable space?
I must share with you, we got government approval recently in this January as a wholly owned subsidiary. We have got Oil India Green Energy Limited. We have already taken a decision, and about 388 crore or so, or 370 crore or so, assets of renewables of Oil India is getting transferred to the new entity. Plus, this we have got 25 megawatt of solar power as we speak is getting executed in Assam. The JV with RVUNL is a strategic move because we have been supplying natural gas to RVUNL as part of the energy ecosystem. So we are looking forward to a faster monetization of this organic growth in terms of our wholly owned subsidiary through 1.2 gigawatt of solar, which is actually 1000 megawatt of solar and 200 megawatt of wind. We are also now looking at future collaborations to enhance our portfolio.
Okay, so that's the take coming in, and once again, thank you so much for taking the time out and speaking to us. You sound very optimistic on your growth levers. Just before we let you go, want to understand a little bit about your progress towards that 9 million metric ton refinery capacity by 2028. If you could just give us a little bit of a breakup of how much would it be renewable, which areas are you targeting, anything on that front?
Okay, so Numaligarh, as I said, we are currently at 3 million metric ton. We are tripling it. December end, we will have the mother units commissioning. 31st March, we will start commissioning of the remaining units. The year in the second half of 26-27 will have 40%, 40 to 50% of the stabilization, and year after we'll have 100% stabilization. That's the plan at Numaligarh. In addition to that, one more thing which I will add here is we have, all of you would know that Honorable PM had already laid the foundation stone of the polypropylene unit, which is about 7,000 crore investment, 360 KTPA of polypropylene unit to the downstream of the refinery expansion. So that would also come on stream by late 2028. So that's the ecosystem we are talking about as far as the downstream segment of our value chain or our investment.
Okay, Mr. Rath, great to have you today on ET Now. Thank you so much for your time.